Hey folks, I'm super excited to get started today. So we're going to be covering our Fibonacci trading strategy series. Now over the course of these videos, you're going to be seeing the Fibonacci patterns in and of themselves, how we validate said patterns, and finally, precise entries and exits. Okay, so today we're going to get started with our first pattern, and it's commonly referred to as the ABC pattern. We're just going to break it down a bit. Using our PFA Zone Sweep Fib Zones tool, or of course we can use any fib retracement tool built into essentially any platform. So we're going to measure from point A to point B, and we're going to expect a certain percentage to give us point C. First of which is going to be 38.2, second, 50%, these are percentage values, and or 61.8. So again, I'm pulling from point A to point B to give me how much percentage am I pulling back of that particular leg. Now these on the top we're looking at, we're going to call those the ABC longs. Essentially it's one pattern with different measurements. And on the bottom here, we're seeing the ABC shorts, again, one pattern, different measurements. And finally, I'll conclude with this. We have point A to B. Similarly, inverted here, we're going to take and pull from point A to point B, and we're going to look for one of three things on a percentage basis: 38.2, 50%, and or 61.8%. Okay, so that's going to provide us first and foremost with our ABC long or ABC short Fibonacci pattern. Okay, so we have some measurements, we have the pattern, right? So let's go a step further. Now we need to validate that pattern. And there's a couple different things that we're going to need on our own charts in order to do so. These can be found on, I believe, every platform out there. So we're going to need two moving averages. Could be SMA, EMA, that's simple moving average, or exponential moving average at your accord, okay? So here's what we need to do. We need leg A to B. We need that to cross the 50 period moving average first. That's important. And then we also need this same leg to cross the 200 period moving average. And we need that to happen second. So to repeat that, we need for leg A to B to essentially cross over. Imagine a 50 period moving average being here, right? And they're typically a little wiggly there, if you will. But so we're going to cross over the 50 first and the 200 second. And the third thing that we need it to do is indeed retrace back to one of these common Fibonacci numbers, 38.2, 50, and or 61.8. So that is validating the setup in and of itself. Okay, great. So now we need to move into the third part of this, which is precise entries and exits. Before we get started, there's just one more component I'm going to need to add onto the chart, and that's going to be a 13 period moving average. Remember previously, we wanted, in order to validate the setup, we wanted to add a 50 period as well as a 200 period moving average. So now I'm going to add a third one. Okay, I'm going to put a 13 period moving average on the chart, which is going to assist me in the entry in and of itself. Here's what I'm going to do. We're going to put that 13 period on there. When we cross and close above that 13 period moving average, it's go time, okay? So that's going to be the entry. But what about the exit? Well, at such point, I'm going to take and measure A to B, and I want to grab 50% of that. So I'm looking for an extension from wherever my entry takes place, and I'm going to take 50% of leg A to B, and I'm going to add that on to my entry. So 50% added on here gives me my final destination. So we've gone through and we've learned about the ABC pattern, more to come. We've also validated the ABC setup. And finally, now we have precise entries and exits. It's now time to move on to our second set of patterns. In this video, we're going to be discussing our double tops as well as double bottoms. You'll see the tops here, naming convention, yes, but the double tops are of course across the top, and then the double bottoms are indeed what you see along the bottom. So similar to the ABC patterns, we're going to have 3 points of data, okay? And instead of referring to them as A, B, C, we're going to refer to these as 1, 2, 3. Okay, so we have point 1 being the top here. Point 2, if we measure from point 1 down to point 2, we're essentially looking for how much of a return or pullback are we getting. So again, percentage values. We have 3 of them. 78.6, that is a potential double top there. If we measure out 88.6, also a double top. And then finally we have the 113, which is a little bit more unique, right? Because as you can see here, we actually violate and or go beyond 0.1. So this is what we would refer to as a momentum double top. Now, conversely, we have the double bottoms, and here you can see that we also have the 0.1, 2, and 3. So we're just going to invert this, pull from 0.1 to 0.2 to give us that 78.6, 88.6, and or the 113 value. So now we've learned about our double tops and double bottoms. Time to validate those patterns. Okay, now we have the double tops, double bottoms, and what we've learned thus far are the percentage values and so on. But what I want to just go ahead and point out, a little bit different than the ABC patterns. Remember, we required moving averages across the board, right? So in this case, in order to validate the patterns, we're not going to require at minimum 2 out of the 3 moving averages. We'll come back to the third one, okay? So in this case here, what we want, instead of the moving averages, it's a little bit more, the premise or concept would be the location. So in the double top scenarios, we want to have a major level of resistance or supply. In the double bottom scenarios, we want to have a level of support or demand, okay? So the requirement is as follows. Leg 1 to 2 needs to arrive and leave said resistance or supply, okay? And then we need to, of course, have the pullback retracement to the 78.6, the 88.6, or that 113. Now on the double bottoms, conversely here, we need to arrive, 0.1 needs to be into an area of support or demand. We need to leave said area and then return or pull back 78.6, 88.6, or the 113, okay? So we need to do that, and that's going to go ahead and validate the patterns. As we stated, we're going to now go back to that third moving average. We said we would circle back to that. So we need to talk about the entry and exit, right? Okay, so we know the patterns. We know the requirements in order to validate the pattern. But now we need to learn about the entry. So what we're looking for is leg 2 to 3 on the departure when we leave 0.3. Similar to the ABC, we're going to look at a close below. Now we're talking about double tops here, okay? So we're going to look at a close below that 13 period moving average, okay? So we're going to go below that 13 period moving average. Then we're going to take 100% of leg 1 to 2, and we're going to essentially duplicate that leg, right? Okay, so in other words, we're going to take this here, and wherever our entry is, we're going to match that, okay? Across the board, same for the double tops. However, for the double bottoms, invert that, right? So we're going to have the double bottom on 0.3. As we're leaving the area, we want to close above the 13 period moving average, okay? In such case, go time. Then our exit, if you will, we're going to take from 0.1 to 0.2. We're going to measure that at 100%. We're going to duplicate that. We're going to add it on to our entry, and there's our exit. As we mentioned earlier, each set of patterns has its own unique personality, right? So here, H&S, head and shoulders, as well as inverse head and shoulders. Okay, so head and shoulders here, similar to the double tops. Inverse head and shoulders, similar to the double bottoms, okay? So what we're gonna do in order to determine, if you will, these patterns, what do they look like? We're going to measure from that similar 1 to 2 leg, but we're going to look for an extension in this case, okay? So in other words, if price goes beyond the structure, 127%, okay? So that's 127, 127%, 161.8%, and or 224%. That's the less common of them, okay? So we're gonna kind of stick with these two is preferred, 127, 161.8% extension, all right? And then on the downside, when we're looking at the inverse head and shoulders, we're gonna similarly pull from leg 1 to 2, and we're going to get 0.3 here, and we need it to be 127, 161.8, or that 224 less common over there. So if we get these, now we can determine that we indeed have either a head and shoulders pattern or an inverse head and shoulders pattern. previously mentioning unique personality, right? So we're going to add to that here. We're actually not going to validate this pattern alone. What we're going to do is look for another pattern to emerge. Okay, so remember back, we were looking for the ABC, right? Okay, so here we go. So once we've determined our values, we've measured 127% hypothetically, okay? So once we've determined that we potentially have a head and shoulders pattern, or an inverse, of course, what we're now going to do is prepare for the next pattern. So the next pattern is going to be the ABC, okay? And if we get the ABC, it's going to be very similar to how we would go about entering any ABC, with the exception of the moving average. So we're going to circle back to this, okay? So again, as far as validating the process here, we've already determined that we have the pattern. I mean, it's there, we've determined it, we've measured it, and so on and so forth. So we are not going to enter based on this pattern. Let me explain why. These patterns in and of themselves are trend following for the most part, right? So we would almost expect to see them in essentially any trend. So if we're in an uptrend, of course, I'm going to expect to see and measure the 127, more importantly, the 1618, and even the 224. So that's generally just going to be a continuation of a trend, and therefore we don't want to validate this pattern or these patterns alone. Okay, time for the entry and the exit. Remember, we're not validating the pattern alone. So what we're going to do is we're going to wait for that ABC pattern to emerge on top of the head and shoulders and or inverse head and shoulders patterns. So now I'm looking for, from point 3, essentially point 3 becomes A, right? So we're going to have a decline away, okay? And that A to B needs to cross the 50 period moving average, right? It needs to cross that 50 period, not the 200, but the 50 at minimum. So it needs to cross the 50 period, retrace back just like the standard ABC, okay, to 38.2, 50, and or that 61.8%. And just like the standard ABC as well, the entry becomes the departure on the downside when we're referring to our head and shoulders, right? So it's going to be the close below that 13 period moving average, and also the exit's a beautiful thing. So the exit is also going to be just like the standard ABC. We're going to take 50% of A to B, okay? We're going to take half that, add it onto our entry, and that becomes our exit. Now, really quick, I just want to say this because the inverse, remember, it is, of course, inverted. So in such a case, if we have an inverse head and shoulders, okay, we're looking for A, for point 3 to become A. We're going to rally, in other words, go up, and we're going to find our point B, yeah? And then we need to pull back 38.2, 50, 61.8, and then we're going to get that close above the 13 period moving average. That's go time, and then exit at 50% of leg A to B. So there we have it.